Welcome to the Week in Review. We're going to be looking at the trading week of April 28th, 2025. Going into this week, it is Saturday, the time we're recording this. So far, we don't have any major news or any major tweets out of Trump that have blown up what I'm looking for yet. So we'll see if that changes from Saturday at 1 p.m. today to market open on Sunday night for Globex and then Monday. So take everything with a grain of salt, I suppose, in this market for sure. So to get some stuff out of the way, we'll look at data. Fairly light data week with the exception of Wednesday onward. So Monday, not much to really pay attention to on Monday, which is nice. Tuesday, we do have JOLTS as well as consumer confidence at 10 a.m. And we have earnings this week. I'll talk about that in a minute. Wednesday, we start getting pretty data heavy. We have the ADP employment print at 8:15 in the morning. 8:30 a.m., we have GDP and unemployment cost index. 9:45, we have the Chicago PMI prints. 10 a.m., core PC index price index. So not inflation, the price index. Sorry, not the inflation print. You know what I mean. Thursday, we have a bank holiday in many parts of Europe, so I would expect the Euro sessions to be a little bit lighter on the volume side. We also have jobless claims at 8:30, 9:45 manufacturing PMI, 10 a.m. ISM manufacturing. And then Friday will be the big one as far as single prints. We have the non-farm payroll employment print and the unemployment rate at 8:30 a.m. on Friday. So going into earnings, some pretty important ones. Monday, not much there. We have Domino's, if you care about Domino's. Some people do. I don't know why, but not much on Monday to really pay attention to. Tuesday before open, we have SoFi, PayPal, UPS, JetBlue, a Coca-Cola, as well as Pfizer. Spotify's in there too. I don't think that matters as much, but this will be interesting as far as these sectors go. UPS is always interesting to watch. Generally, their shipping guidance is a decent indication of how how shippers and receivers look at forward guidance is usually indicative with broader market changes a lot of the time. So the way they see traffic ebb and flow as far as things actually moving, commerce actually moving, is interesting to pay attention to for what they see going forward as far as economic states, growth, etc. So it'll be interesting to see that. Tuesday after close, Visa, Starbucks, Snap. Before open Wednesday, not much. Caterpillar, again, not hugely impactful. After close Wednesday is when things get real. So we have Microsoft, Meta, as well as Qualcomm reporting. We have Hood as well, but as far as market movers, Microsoft and Meta will be very important. Qualcomm for semis as well will also be very important. And then Thursday before open, we have LLY, healthcare sectors, as well as McDonald's. So those will be interesting. But again, big movers after hours Thursday will be Amazon and Apple, obviously. So Wednesday, Thursday, really important after the close. Really important to pay attention to how the market receives that data, as well as what their guides look like. Apple doesn't usually give full guidance. They'll give some indications, but they're not super big on guides. I don't know, as far as Microsoft, Meta, and Amazon, Tesla kind of took a bit of a cop out and said, we'll revise guidance coming into Q2 because the economic situation right now with tariffs, etc., is so crazy. We can't really give you solid numbers. Seems like a free pass for other companies to do that as well. So I think that's possible. I think we might see a lot of companies reporting start to kind of move in that direction and say, well, it's probably this, but might change by the time we get to Q2, because who the hell knows what's going on with tariffs? Nobody does, not even the administration. So we'll see. And then Friday before open, Exxon and CVX. Again, not market moving, but interesting to see these two guys here as far as the energy sector goes. Looking at the S&P 500, pretty crazy week as far as what happened last week. The week started off very weak. So the prior week we had an inside week, short week, inside week range. And then Monday we basically liquidated from the open. We liquidated below the inside week break. And this is generally extreme weakness. So inside weeks failing to the downside usually signals extreme weakness. And then what we had a fairly substantial reversal even into the close after we couldn't sell below April 10th's low. So this is the 90-day pause rally on April 9th, and we had this massive correction back down, which almost limited down the S&P 500, and backfilled essentially this gigantic set of single prints. We backfilled this partially. Once we swept this low, sellers had no ability to continue this lower and even close the set of single prints, and it sparked a massive rally and reclaim of the inside week lows, which happened on Tuesday. So basically, once we were back into this inside weekly range, the move generally in these situations will be a reversion back up into the midpoint and back up into the highs of the inside week. Same thing with an inside day, just on a broader time frame. That's exactly what we got. We had the gap up on Wednesday, as well as continuation there Thursday with a full trend day up. And then Friday was a lot of chop, but we ended up closing above April 9th weekly range, or daily and weekly range, which is right up here, 55.28s, 55.20, 55.28s, and we closed back inside March range. March lows are 55.09s. So we had a multi-distribution trend week higher, outside week break up last week. So on a short-term perspective, momentum is with buyers at this point in time. So for me, I don't want to say that this is going to be an easy week, because obviously we have data. We have a lot of big earnings that come later in the week that could completely change the picture of this. But as far as the early area that I'm watching, from a simplicity standpoint, for me up here, buyers want to remain in control by holding this upper distribution up in here. And I think as far as where I'd be looking, as long as we're not selling below 55.20s, so as long as we're not selling back below April 9th highs, and we're not selling back below this inside weekly high up here, which is basically last week's POC, I'm going to be looking for the long continuation trade to eventually get back up into 85s, which is the low of the close of the liberation day down, and then the gap fill at 56.10s. If buyers really crank this, then I think the possibility of getting above this gap is there. I'd be looking as high as the 50-day simple moving average on the daily time frame, which is up here at 56.60s, to back test this, and then potentially as high as the 5700 area up into 5700 to 5720, which again is this huge pivot that we have, which is prior monthly range. Prior monthly balance range that we ultimately broke down out of and started that massive liquidation lower. And obviously we have the liberation day spike and the 200-day moving average up here. I would say that from a short-term perspective, with how last week closed, with how aggressive we were, if we're holding outside 55.20s, I think the trade is to the upside, and ultimately we do get up into this gap fill and potentially up into this area here. Bigger picture for me, I think fishing for higher time frame shorts is still acceptable, and I think where I'd be looking for that ideally would be up into 57.20s to 57.70s, basically up into this range. Up in here, I'd be very cognizant of the fact that a lower high could start to form up here. So if we see if we do have a lot of momentum, and this might not be this week either, but if we have a lot of momentum to the upside and we start seeing some sellers really start to hit the tape up into this range, then I think the potential for a lower high to form for another potential move down is absolutely there. So we just need to be cognizant if we start trading up in here. I'm not saying front run it and try and short, especially don't try and short all the way up here. If we start breaking and we have momentum, you'd be fighting an inside week break higher, and generally those can expand quite quickly. So if you see momentum to the upside, trying to pick a top is not going to be in your interest. You want to see the daily start to slow down. You want to see sellers of note, of size on the tape. You want to see a solid offer to work against, and you want to see failures around here with solid volume to try and get us back down. That's what I'll be looking for. So until I see that, I'm not going to just try and pick where I think a lower high could potentially form, right? So with that being said, where I think on a short-term basis, sellers could potentially take control again would be if we start offering 55.20s. So if we see, if it's tweet related, whatever it might be, but if we see failures at last week's high and we see 55.20 start to offer, especially if we see volume get put in under last week's POC at 54.90s, I think we could see potential liquidation of all of this inventory that we put up here. This was extremely aggressive buying, a lot of buying at market. A lot of buying above the ask pretty much all day on Friday and a lot of the closing periods on Thursday. So if we do start seeing 5500s, so this area here, March lows 5509s to 5497s, if we start seeing this area start to offer and we see some volume start to break down, break below this, I think there is a liquidation risk of all this late volume that's up here, and I'd be looking as low as back down into 5400s, back into the 20-day simple moving average, as well as last week's VWAP, back into this unfilled gap that we have into 5400 to 5380s, and then if it gets really nasty, I'd be looking to fill this gap, this Globex and this RTH gap, into 5340s all the way down into last week's value of 5300s. So basically I want to stay long as 5520s are staying bid, and if we start to see weakness, I think that weakness encroaches below 5500 to 5490s, and that's when we could really see all of this inventory start to puke lower and potentially backfill this gap. And I'd want to stay on the short side as if we start failing again back inside that inside weekly range. So NASDAQ's going to be basically the exact same situation. The NASDAQ has been leading, so we had continued strength. Strength is a relative term because we're still down quite a bit on the year on a lot of individual names, but we had that lead with the NAS. And again, I think the big thing for me is watching this 19400 to 19250 range, basically this upper distribution, last week's POC, as well as the 90-day pause rally high up in here. As long as this is staying bid, so as long as we're finding inability to sell below this and we see decent lows get put in up into this range, again, I think the trade's going to be higher. And the long trade continues up into the 50-day moving average, up into 19800s, and potentially again back up into the Liberation Day spike up into 20,000 to 20,040s. Obviously, the 200-day moving average is still quite a ways away at 20,300s. The same is true for me with the NASDAQ as it is for ES. I think we do have to be cognizant on the bigger picture. I think we have to be cognizant of the fact that a lower high could start to form here. It's going to be the same conditions that we had for ES as we would for NASDAQ. Again, you'd really want to see a solid offer start to form, and you'd want to see a lot of volume get put in with not a lot of result for continuation upward. Start trapping more inventory higher, really start putting late buyers offside, and then you want to see it start to fail. So ideally, really what you'd want to see is a balance range start to form up here, and then that balance range breaks back down, and we could be looking at potentially a lower high for a move back down into the lows. The other situation, and again, I'm a day trader, so for me, I don't actually care what the bigger picture is from an intraday trade basis. But the other possibility here too is that we go a lot higher than everybody expects. I think sentiment, as far as what I can see, is fairly split. Some people are saying this could go potentially parabolic if conditions start to force themselves. So if there's a complete fold on tariffs, if there's earnings better than expected earnings, and then those get boosted by folding on tariffs on guides, maybe there's a potential that we go up to all-time highs again. It's entirely possible. I'm not trying to predict where this market's going, but I'm just simply trying to look at areas where I can manage risk, and where potentially we could go a lot higher or potentially go a lot lower, depending on the reactions of those areas. So it's corny, but it is one of those things where it is react, don't predict, essentially, right? If you're a short-term trader like most of us are in the futures market, that's really what we have to do. I hate that expression. It's very overused, but I do think especially in times like this with higher volatility, I think that is something you just have to keep in mind. And you have to keep in mind both directions of a trade are completely valid. We're in a market right now where Trump could send a tweet and we could go 5% either direction. So you have to keep that in mind when we're trading in these conditions. As far as the short-term downside for the NASDAQ, again, it's the same thing I'm looking at for ES. If we start to not be able to accept this range, so if we start to see decent sells below with decent volume back below this 19,300 to 250 range, again, I think what we could see is a bit of a liquidation of all this late inventory that's up here, and get us back down into the 18,850s range into this gap. And again, it could potentially get nasty and fill this gap down into 18,520s. So I'm going to try and keep it really simple and just work around the assumption that, in the short term, buyers do want to stay in control above those pivots, so above that 5520 area and above the 19,400 to 250 area. And as long as we do keep this bid, then I think again it's just going to be a grind higher that gets us in, and then we see weakness. If we see weakness start to set in, if we can't stay above this, and there's a liquidation risk for sure below that we could potentially see all the way down to this gap and potentially fill the gap. So keeping that simple, keeping it high level. Be careful this week. A lot of data, a lot of earnings coming out that can move the tape. I hope everybody has a good week. If this video helps you at all, please like the video, please comment, please subscribe. I would appreciate it a lot. Thanks for your time.